Today, Bitcoin inches higher even after the global trade war escalates and stocks slide. The Senate Banking Committee advances two key pro-crypto nominations. And the president of the Solana Foundation sits down with us to discuss institutional adoption of the network. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto prices moving higher to end the week while stocks continue to crater following their worst day since 2020. As of noon Eastern, Bitcoin climbed 1% to just under $83,000. Ether inched higher by less than 1% to just under $1,800. And Solana's Sol token jumped nearly 4%. The moves higher come as crypto-focused stocks fell again after China retaliated against President Trump's sweeping tariffs. Despite recent market volatility, Bitcoin's price has been confined to the $80,000 to $90,000 range for most of the past month as investors take cues from the equities market without a crypto-specific catalyst. Taking a quick look at crypto-focused stocks, all are in the red as of noon, with Coinbase falling the most by more than 8%. For the week, Bitcoin is down by about 1% and is on pace for its fourth straight weekly loss for the first time since last July. Ether is down more than 4% for the week, on pace for back-to-back weekly losses and its sixth negative week in the past 7. Okay, let's talk about the top stories. President Trump's pick to run the SEC is one step closer to confirmation. The Senate Banking Committee voted yesterday to advance Paul Atkins, who's known to be a strong backer of crypto. The committee voted 13-11 to move forward with Atkins' nomination as SEC chair, along with another nominee with pro-crypto ties, Jonathan Gould, as U.S. comptroller of the currency. The vote followed party lines in the committee. Both nominees will now move to a vote by the overall Senate. During Atkins' opening testimony before committee last week, he said it would be his top priority to provide a regulatory foundation for digital assets and that he will work with commissioners and Congress to make that happen. Atkins would succeed Gary Gensler, whose notorious regulation by enforcement approach to crypto aggravated the industry. Next, CoinDesk reports that Illinois' Secretary of State plans to drop an ongoing staking lawsuit against Coinbase. That would make Illinois the fourth state to drop its staking case against the crypto exchange in recent months, following Vermont, Kentucky, and South Carolina. We reached out to the Illinois Secretary of State about the comments to CoinDesk, but haven't heard back yet. These state dismissals mirror moves on the federal level, with the SEC dropping its Coinbase lawsuit in February. The agency initially claimed the exchange failed to properly register its staking program. This week, we spoke with Coinbase's chief legal officer, Paul Graywall. He told us that the individual cases had no basis in law and that he's pleased to see both red and blue states are joining the SEC in recognizing that. Finally, Bitcoin-related startup deals surged as crypto prices rallied to record highs last year. A report from Trammell Venture Partners found the number of pre-seed transactions in the Bitcoin startup market rose 50% in 2024. The data shows that more entrepreneurs got into the Bitcoin arena despite a cautious funding environment for the broader tech startup world. Trammell's managing director attributed the renewed interest in building on blockchain to technical upgrades and increased confidence in Bitcoin's long-term resilience. Research firm PitchBook projects crypto venture funding will surpass $18 billion this year, nearly doubling the $9.9 billion average from the 2023 to the 2024 cycle. PitchBook expects greater institutional engagement from firms like BlackRock and Goldman Sachs to deepen investor trust and lead to further capital inflows. All right, for our main story, Crypto World's Mackenzie Sigalo sat down with Lily Liu, the president of the Solana Foundation, to discuss institutional adoption of the network, especially following last week's news that BlackRock expanded its blockchain-based money market fund to Solana after debuting on Ethereum last year. The two also discussed stablecoins on Solana and regulatory advancements for crypto in the U.S.
So BlackRock recently expanded its tokenized money market fund to Solana. What does this signify about the blockchain's expansion into institutional adoption and wider trends?
We're super excited about BlackRock bringing their BUIDL product, which is one of the flagship money market funds in the industry, to Solana. Solana, we've been working on partnering with institutions for quite a while now, because I think that our vision for what blockchains are is that it should be global financial infrastructure that bring all of the assets available to people around the world that have access to the internet. And so that is something that we're super excited about, because BlackRock, household name, fantastic product, and being able to make that available to the world of people who are using on-chain DeFi, I think that's really exciting.
And Larry Fink has said that ETFs were stage one of this financial revolution. He believes that all financial instruments should ultimately be tokenized. What do your conversations with either BlackRock or other wealth managers and banks look like right now in terms of what products you'd like to work with them on?
Yeah, that is a view that Honestly, a few years ago, I wasn't sure that institutions were really going to get on board with that view. But I think there now is consensus that the best assets want to be everywhere, and the best assets want to be able to sort of meet demand and meet buyers and meet holders where they are. And increasingly, if you look at crypto as an asset class, we've got $3 to $4 trillion of assets on chain, and this is now a new distribution platform. And that's why I think some of the best assets from the best asset managers in the world are now looking at this as a really not just viable, but also desirable distribution platform for their assets. So it starts with a money market fund, and that's, I think, how folks kind of run the tokenization infrastructure. Once you've tokenized a money market fund, we've already seen private credit funds come online, and then that's going to open up pretty quickly into the whole world of traditional finance assets, which taken as a whole, I think something around $100 trillion of assets. Of course, there's a lot of variability in what those assets are, but now we've started to open the rails and open the ability to tokenize a whole range of different assets and make them available on chain.
Is there any sort of pent-up demand while people wait for regulation to catch up with what they're doing? So obviously we saw SAB 121 rolled back by the SEC, and so that made it possible for banks to custody cryptocurrencies. Is there an unlock in a market infrastructure bill that would potentially, I don't know, speed up this process or make it possible to tokenize assets that you wouldn't be able to otherwise?
Yeah, I think the next bill that we're all going to be looking at, so certainly market structure bill, and then also stablecoin bill. So stablecoins, that actually is how most people are going to be transacting in not just the on-chain economy, in any economy, because all trades go through stablecoins and all payments go through stablecoins. So I think once there's more certainty on certainly market structure, but also on stablecoins, that's really going to open things up.
There's a lot of stablecoin activity over the Solana blockchain. Why is it a prime destination for that? And then two, you mentioned some of the legislation that's winding its way through Capitol Hill. There are two competing bills right now. There are different questions about where a lot of that regulation should go, if it's federal, if you chalk it up to the states. First, talk to me about the stablecoin market volume that you're seeing over the blockchain. And then two, let's talk about some of that active legislation that's out there.
Yeah, so stablecoins, the reason why I think they're so important is, again, all trades, all transactions ultimately come in and out of stablecoins. So if you own stablecoins, then you own the economy. That's why I think stablecoins are so important. And also, certainly in this interest rate environment, they're very financially attractive. And that's kind of been a very big incentive for folks to get into stablecoins, where a few years ago, they were not profitable. And so not a lot of people were interested. But now I think that those various views are coming together. So they are, I would say, RWA v0 as well. And so I think stablecoins are really top of mind for us. And why is Solana attractive for stablecoins? Well, Solana, everyone typically thinks about Solana as being very performant. Said more simply, fast and cheap. I've heard that more than once. But that's really important for financial transactions, because if you're going to be transacting, you actually want to spend your resources on the assets, sort of preserving the value of those assets. You don't want to be spending a lot of time and money just getting the assets to where you want them to be, right? So if you actually want to be able to operate a payments network, well, that payment network in terms of performance, both cost and time to transact, has got to be more or less similar to how we experience Venmo, to how we use all the various fintech apps in the world. And that's where performance is not just a metric, but performance then becomes an actual user experience. And that's why a lot of folks come to Solana.
And stablecoins are one of the verticals that you've got. You've also are working on payments, consumer apps. How do you see all of these rolling up to the main blockchain?
Yeah, I see them all being related to one another, because ultimately money is a network business, and money is something that gets used fungibly for payments, for trading, for investing, for savings. These are just all different ways to use what ultimately is just the money that you own, right? And so we sometimes talk about them as being somewhat separate verticals, but ultimately the idea is that they kind of blend together and you have this integrated on-chain economy. And so, and kind of like the lubricant for all of this is stablecoins. And that's also really important to building an economy around real-world assets on chain, because ultimately people go in and out of different assets, which people will typically see as a savings instrument or an investment instrument. They will begin and end with stablecoins.
What do you think of the two bills that are out there right now?
I will leave that to the policy experts.
Are
Yes.
you talking to the Trump team at all on their, we've seen so many different crypto initiatives, whether it's the Strategic Bitcoin Reserve, some of the other EOs. Obviously, David Sachs is now in a position where he's overseeing a lot of what we're seeing with respect to this sector. But are you having conversations with anyone related to the White House?
So certainly the executive branch, as they've been putting together various industry forums, we've been in touch, right? We've been in touch, had some conversations. Now, when it comes to some of the things that have maybe made headlines, we have not actually been involved in that. And certainly folks have chosen to use Solana for various projects that they're launching. But I'm really happy to say that's really just what the community has wanted to do.
What kind of conversations have you had? What are the questions that are coming from the executive branch?
So I think that overall, there's an interest, there's a view that crypto is innovation that America wants to be a leader in. That is a big difference from where we were 6 months ago, and certainly I would say largely over the last 4 or 5 years. So that's really encouraging to us. And I think now the conversations are really very constructive around what market structure can we put in place that is both good for consumers, good for the industry, good for innovation, and tries to responsibly support the growth of this industry in America. Recognizing that America it's a good thing for America to try to be at the forefront of innovation, and this, like AI, is a huge trend, one of the most scalable trends of innovation anywhere in the world right now.
All right, that's all for Crypto World this week. We'll be back again on Monday, and we'll see you then.